And what a way to close the week with rates rallying. Yes, you heard it here first. Rates hitting their lowest point in the last 3 weeks. So gone are the days of the tariff, so to speak, and all that noise. We seem to be at a little bit of stability, and we're going to talk about what happened this past week. So as you head into this weekend, whether you're doing an open house, talking to potential clients, whatever the case may be, we can all make sure that we're well aware of what happened this past week so that we can talk and help our clients make educated decisions. Once again, my name is Kevin Weedmark, AKA the Mortgage Mouth, bringing to you the Friday wrap up. So let's just dive right in. And as I already mentioned, rates rallied this week, hitting their lowest point that we've seen in 3 weeks, and that is fantastic news. The other thing that we're really seeing that I love seeing play out, and I mentioned it in my daily dose of that I give every week, is the traders trying to figure out, do they want to pay attention to fiscal policy? You know, Trump indicating that he was going to fire Fed Chairman Powell, or do they really want to back in and look at the long-term play of the economic data? And what we saw is if the administration gets away from fiscal policy, from basically, what happened was Trump said he was going to fire him, then he was like, whoa, I got my fingers crossed, I'm not going to do that. The markets don't want to hear that noise. They rather just let's do stability, let's digest economic data. You want to mess around with these tariffs, we'll determine what we think the long-term outlook is going to be with regards to the economy, inflation, and we'll move treasuries in either way. And what we're seeing right now is the play of, okay, these tariffs look like they're starting to come to fruition in the fact that a lot of countries are coming to the table. Trump announcing that he's in good negotiations with China. He's also announced that within the next 2 to 3 weeks, a lot of this is going to be settled. So a lot of people are saying, okay, although we saw higher prices this week with PMI numbers, manufacturing and services, if you recall, previously the CPI and PPI looked pretty good. They actually came in non-inflationary. So it's kind of wiped that out. And now we're looking at, well, the greater horizon means an economic slowdown, especially given durable good orders that we saw, and retail sales were way up, meaning that a lot of consumers are rushing out, purchasing items that they believe are going to see a price increase. So that's what we're seeing. We're getting back to some stability. We're getting back to a long-term play. The other thing that really hit this week is we had a Fed member come out and indicate that they may be looking at a June rate cut. So as much as traders had to deal with the fiscal policy side of Trump making the announcement and attacking the Fed over last weekend and into Monday, we now see that maybe it's having an effect on some of these Fed members, and they are contemplating a potential Fed funds rate cut come June. Markets would love to see it, cheaper money, so on and so forth. It would be great for what they perceive as a slowing economy. So that could be good news. I will warn you, however, it could be bad news initially for interest rates. So we'll make sure we keep an eye on that. The other thing that really helped this week is we had Treasury auctions. Foreign investors, as well as obviously U.S. investors, bought up government debt, and that is a great sign. Given all the turmoil, it's good to know that U.S. government debt is still the Class A asset for a lot of these foreign investors to put as a safe haven of their money, knowing that they will get paid back and knowing that they will get a great rate of return. So that was good news. As I already mentioned, we saw that PMI was on the rise. Really something we need to pay close attention. I think if we start seeing 2-3 months of these kind of numbers where we're starting to see the effect of tariffs coming into the economic system for consumers and price points that they're paying for consumables, I think that we may see higher interest rates ahead. The balancing act of a slowing economy is going to play out. I don't think it's going to be drastic because, once again, as I've mentioned over and over again, a slowing economy means less spending, which means that it's really hard for manufacturers, for service providers to raise their prices when there's not as many consumers, right? So it makes sense in that regard. The one thing that we did see on the housing front that you cannot walk away from is housing sales plummeted to lows not seen since 2009. Now, I know new home sales, they looked good, and understandably so. We've seen this dynamic before play out. We get higher interest rates. People that are going to spend hard-earned money are going to flock to something that's brand new. But what I do caution is in looking at the numbers this past week with my cohort on what's brewing, Jennifer Goodman, she pointed out and pulled up in the Austin, let's just talk about the Austin market. In Travis County, prices were up. So yeah, you can look at those numbers all you want. And my point being is this, that is what we need to stress to consumers. We need to start really pinpointing to consumers that, hey, all these markets are hyper local. You can read all this national news. What you really need to focus on is where you want to buy, talk to the right mortgage people, me, and make sure that they're well educated and help them understand that stop reading the national news. And I'll also throw in another caveat. They are not going to pick the bottom. No one ever really picks the bottom. I'll be honest with you right now, it happens by luck. That's typically when it happens, because from day to day, nobody can dictate exactly the market moves that are going to happen. So I hope that helps. Also, just a flash look to next week. It is chock full of market moving data. So make sure you're talking to your clients that they are on speed dial with their mortgage lender, especially if they need to lock, especially if they find something over the weekend. I'd love to be the person that they talk to. Somebody that is well in tune with what is going on, what economic data is coming out on what day, and how it could potentially impact the market. Again, helping our clients make the best educated decisions possible. My name is Kevin Weemark. Once again, I am a nationwide mortgage lender. You have any questions, you need a flyer, you need a payment, you need a pre-approval, whatever it is, you have a question, I don't care. Give me a call, give me a text, give me an email. I respond in no more than 2 hours, typically within 30 minutes, and I'd love to hear from you. All right, y'all, have a great weekend. Cheers, and I'll be coming to you on Monday with the week ahead.